Okay, welcome. Good morning. It's Saturday morning. We're going to work on the sports agency model. I'm going to try and get as far as I can. We've been working on this is week 3, and I've done 2 streams this week. This will be the third. I plan to get as far as I can. So far, we've gotten down to EBITDA. We've gotten all the advanced logic in. So today's going to be financial statements, ancillary statements, and schedules, and we're trying to get the income statement, balance sheet, cash flow logic in there um, and see how far I can get. I'm trying to finish it today, so we'll get into that. Before I do, remember to check out more financial models, templates, and tools at smarthelping.com. The industry specific page is where this sports agency model is going to be listed when I finish it. It'll be right here for $45. And remember, if you do buy any bundles, it gives you lifetime access to anything in the future as well as everything that exists in the bundle. If you want to buy everything on the site, you can go $9.99. And I've got all kinds of startup models, investment analysis spreadsheets, strategic planning for SaaS, recurring revenue structures, real estate underwriting tools, industry specific models like the one I'm doing now for sports agency, uh, simple joint venture distribution waterfalls, accounting tools, human resource tools, personal finance tools, Google architectures, sales pipeline trackers, business valuation, all sorts of stuff I've built over the years and will continue on. Let's do a sound check and send this out to Twitter. Sound check and send this out thank to goodness Twitter. The sound's working. Good. We had some technical difficulties on Monday. Okay, great. So Saturdays, I don't stream often on a Saturday, but I felt the need. I really want to get this model done. I'm not trying to drag my feet on it, and I'm looking forward to the next thing. Um, also, uh, a side note, one of the most popular templates, the inventory tracking and restocking tool, which I have here. Someone is asking for a 400. I've had like probably 15 requests over the years. This is the most popular template on the site. To extend this out. So right now it works for 19 SKUs. If you had more than that, you'd have to categorize them together. So I might, I don't know, over the weekend or maybe on stream on Monday, I'm gonna extend this out to 400 or 500 SKUs. If anyone wants to help fund that, you can pay 1 credit hour at smarthelping.com under the financial modeling services link here. You can go here, fund 1 hour. I'm gonna probably do it anyway, even if nobody does. So that's possibly happening next week. Okay. So on this sports agency model, I think it's ready for import. Well, no, we got to add. So we need to make sure these tabs match. So let's add the income statement monthly, income statement annual, balance sheet monthly, annual, and cash flow statement. This is a pretty fun thing I do where I figured out some nice logic that I can import because the 3 statement modeling is pretty structured. It doesn't really change much. Sometimes there's extra rows or line items depending on what the model does, depending on inventory. There might be some liabilities that are different, but other than that, you know, cash flow, um, the income statement structure is pretty similar in most of them. So we'll import that from a different template and then link up the monthly detail. I'll also have to create the annual detail. For now, let's see, can I copy this? Yeah, I guess we can. Just so it's here. What is this? Did I do a 10-year on this? Or 5? Oh, yep, 10 years. Okay. Oh yeah, remember it's 10 years because a lot of the athlete contracts are, longer, so you need to have more than a 5-year plan to get a nice forecast on this one. All right, the rest of this week we'll do this at the end. Okay, so we got all our tab names in, startup costs. Okay, that all looks good. All right, let's look for a sheet to import. So this is the sports agency is a 10-year model, so we want to pull from a model that's already 10 years out. It doesn't have really anything advanced. It's no inventory. We're not doing liabilities or anything like that. Uh, Besides debt, not any really advanced assets, just cash. Now, so for revenue, we do have. We're assuming that as the athlete earns, the agent earns, and then the earnings, the value of the annual value of each athlete type is here, and then the percentage earned of that is defined by these percentages, however that might be. So there's a lot of options, functionality here, and versatility. And then the agency's share will just be a percentage of both of these types. So there's not really, we're basically modeling cash flow here. Okay. So let's look at the most recent one is a construction business. I think that's a 10-year as well. I'd like to pull from that if we could. Plus, it's already got the formatting that I want. Yeah, it has that formatting perfect. And let me look at the balance sheet here. So there's not this row, but everything else is normal. Yep. Now, for a sports agency, you might not have many non-current like capital assets, but I don't know, maybe you have some equipment, computers possibly that you're depreciating. Probably not a building or anything, but I guess it depends on the size. Okay, I think this will work. Just looking at the formatting here. Oh yeah, and then I wanted to look at the income statement for the final year for taxes. Perfect. Okay, that's what we want. All right, cool. So we'll use this as our import template. This fits. And I can't tell you how many hours it will save you if you find a good, um, that's the big value of my whole site is having templates for all kinds of different industries. So when you start a financial model, there's a lot of stuff you can use already. And it save hours and hours of time. Also errors because all the logic's already built and been checked. So there's income statement monthly and annual in here. Let's get the balance sheet. So what I'm doing here is I'm copy and pasting all of this logic over. All the tab names are going to be the same from this workbook that I'm copying from to the sports agency model we're working on here. And then what I'll do is a find and replace. And the find and replace will work as long as all of the tab name references are spaced, meaning that the word has a space in it. And that's important for the find and replace to work. So that's why I have, like, even in distributions, it has a space 1 in it. It's not just distributions because then I couldn't import correctly. Okay, balance sheet. Let's do the cash flow statement. And it's very helpful to have a diverse set of templates to pull from because so there's so many different situations and nuance. So, I've got 5-year stuff, 10-year stuff, stuff with a lot of capital assets, stuff with just a normal, like a regular default amount, uh, enterprise B2B SaaS has a lot of complex stuff that's unique to that. There's just so many valuable templates to have and build. So this is such a great tool for any like consulting firm or financial planning firm that wants instant access to like 60 industries immediately. That's the value of smart helping. Uh, okay, what else do we got? Executive summary. Distributions. Cap table. The cap table I've now defaulted. Before I had preferred class A and B options built into the default. Now I just assume so people can kind of understand it better. Just 100% common shares, and then all you do is define of the minimum equity required. You can define the investments for outside investors versus inside investors in this column, and then the percentage of ownership they get. So these are the only two columns that matter, and they just need to add up to the totals. These should zero out at the bottom here. And then you could see cash distribution contributions over here, and the internal rate of return for each individual. So all this other stuff like A and B, it's usable if you want, if you have other stock types and shares for different investors. But the default is now just going to be 100% common with these two. So it's just, I think a lot of people were getting caught up on that on the default version. So, okay, cap table. This is the capex schedule for depreciation and capital asset purchases. Now, obviously, on these models, I can't cover 100% of everything. They take me like 8 months to do, and I would just never, I wouldn't get anywhere. You know, I need to have a good amount of volume, but a good amount of detail as well. So this is the best balance I've found is what you see. Okay, do we have everything? Well, let's test it out. So, we'll start on the terminal value. Let's go find and replace. We want to replace anything that says construction business in brackets with nothing. Oh, wait, the entire workbook? Nice, 27,000 replacements. So that is done. Now I don't need this anymore. Exit that out. And now we can format the tabs, clean them up. So remove grid lines, make these 15, extend these a little bit. Give these a data validation. I'm excited about this model. It's got some brand new logic for how revenue is earned off of the earnings of something else with a very dynamic. You can basically define how the contract of an athlete is changes over time against a base value, and then a percentage of that's what's earned by the business. Okay, cap table. So you see now all these references to other workbooks are just in this workbook. They're not referencing the other, construction business template anymore with that find and replace. So it's really nice and clean way to do this. And all this logic is, and you can see why you have to have the positioning, all has to be the same structure and everything else. And there'll be some light work to make sure, like on an income statement, we'll have to here we'll have to adjust the references obviously to match this monthly detail because the monthly details are different on all of them depending on how they need to be laid out. Okay, freeze. Oh, and then this can reference validation 1. Now on all the financial statements, I do column width 15. It's usually big enough and no grid lines. Everything else should be good to go. This can reference the first date. So most of the tough work is done in the first couple, like building out what assumptions are required, what's the actual mental model of how this is going to work, how is everything implemented, and then the grunt work that I do here is this is the lesser fun parts, but still essential to make the model complete. Oh wait, oh yeah, that's fine. Okay, we'll update these labels here later. I don't know if I'll get into the visuals today. I really want to finish this thing. Maybe we'll do some visual Sunday. So Sunday, tomorrow, I'll just do the visualizations and finish up everything. I don't foresee this having much issue though, finishing all the financial logic. I think we'll be able to do this today, and it shouldn't be too hard to do all the sanity checks and make sure the balance sheet balances. And all our statements match. One of the hardest things in doing this that's not really avoidable is making sure what's on the monthly detail, which is driven from all the assumptions, matches what is on the financial statements because they're only connected through formulas that have to be adjusted. So that's one of the manual touch points that's not avoidable. So that can sometimes be an issue with it when there's different things to remember to reference in. But that's why I have sanity checks that also check these statements values against the monthly detail because you could balance the balance sheet but still be off against the monthly detail if you're just not including something. Okay, this is good. We'll do these at the end. I guess I can still format it, but we'll have to fix the references to this and this. All right, so, well, if you're a sports agent and you use this, you'll have the best financial planning spreadsheet in existence, I guarantee it. It will be the most comprehensive. Okay, so I like to put these in a darker gray for the financial statements. So now that all this is in here, we now need to make sure it makes sense. So revenues, we're going to have three revenue streams that I think, well, no, we could just do, it's all the same type, so this is going to be, we could put all three, that's fine. So we'll put agent commissions type 1, 2, and 3. Now in this format, yeah, let's bring all these over indent 1. Okay. So we have revenue type 1, which is this, and remember we're taking agency commissions on player contracts and endorsements. And let's fix that, so it should be play or athlete contracts. Athlete contracts. Okay. I'm not gonna put all the, like, I'm not gonna put the types of if it's endorsement revenue or player contract revenue. Although since we do have it here, the visualizations probably can include that. Okay, so it should be 52, 36, and 20. 20, 36, 52. Okay. So these are the commissions earned or cut of the earnings for the agency. Now, oh, this is a little bit different. So, okay, this actually works. So instead of construction costs, these are going to be variable costs per athlete. And type 1, type 2, type 3. So this is actually perfect. We can use this, and this will be total variable costs. Because remember, we did variable costs per athlete type for player contracts and endorsements. So this is essentially how much the agency is paying or has expenses related to the athlete count based on active player contracts and then active endorsements as well. So there's two, for type 1, 2, and 3. I believe we can just drag that. Perfect. Okay, now let's make sure we got everything. So this gross profit should match. It's 95,179. Oh wait, I didn't do anything below that here, so we just have to add. So now these we do have. So sales and marketing is going to be here. G&A going to be here. Variable costs or R&D, other OpEx. This is actually research and development. Startup costs are fine. All right, this looks good. Drag it over. Now EBITDA is what we want to check. So 88, 771, 504. Oh, nope. Oh wait, we have other costs as a function of monthly revenue, which is going to go into G&A. So let's add that into here. So this is going to be this plus that. That's basically a catch-all expense if you can't account for it anywhere else. You can just enter percentage of total revenues. So now we're at 8704. Still off. All right, what are we missing? So we have that. Do we have the variable cost right? 1825. 18250. Yep, that's the same. Revenue 1134. Yep, so that's good. This is correct. Oh, so OpEx, it won't have this. Let's just check it without this in here. We're at 8574, 866. What are we possibly missing? Let's double check this formula. That looks right. Let's check this. That's good. What are we missing? Let me put whoops, this back in. Well, what I can do is reference the monthly EBITDA and see what it's off at. So we know this is off by this amount. That's fine. Okay, so here, we are definitely out by 25,000 in February. Now what's 25,000? Revenue 4, 3, 14. E and F. Am I in the, let's see, is this all starting in E? It could be a reference column issue. Let's see, that's all E. That's good. Yep. Oh, so that's fine. 14. All right, so let's just look at this for February. We have 4,000 in revenue, 1,000 expense here, 12,000 here. Ah, okay. This is wrong then, somehow. So I have E59 plus 62, 60, 63. Wait. This is the variable cost up here. 1,007,250. No, that's right. And then here's 14,000. 11,256, 7,517. Wait, no, that matches. I was referencing the wrong thing. Hold on. So this is right. Here is February. Okay, so these are all the same. Oh, it's probably something at the end that's not stopping, maybe. Oh, hang on. This is the same. All these are the same. So if I sum these all up, we're at 86,604. And then if I remove this, oh, this is the same. What in the world was I thinking? So besides the start month, 86, let's just sum up February on. 86,617. Yeah, it's the same. I don't know what was I summing up cash flow maybe or something. Okay. Anyway, this is just a quick sanity check. It's not supposed to be like we'll have other more clear checks on this. Okay, so interest is fine. Depreciation, this is all fine. Okay, so far this looks good. Let me make sure the annual looks the same as this. Oh wait, we have to extend this out. Okay. Good, so that's already summing up that. That's fine. All right, and then, okay, this checks out anyway. It's the same as the monthly, so we're good there. Okay. Let me check. This is, what are we doing the valuation on? Trailing 12-month EBITDA. So 32. Yep, that's fine. 10 million. Okay, let's put this at like 4. Just want to check something. Okay, that's better looking. That makes more sense. Okay, good. Balance sheet. So we don't need this. Don't need this. I do want to format these with an indent. Okay, so these are off. What is going on the cap table? 0. Oh, that's right. So, let's see. This is off for now. Let's do the cash flow statement next, and then we'll get into finishing up this monthly detail. So cash flow receipts is just revenue, so C10, that's fine. We don't have any earned revenue, it's just, don't need that. Other OPEX is 2919. Now that should be fine, it's just this and this. The rest of that's good. Okay, so this is looking correct. Um, I'm going to go to the bathroom and I'll be right back. Stand by. Okay, we're back. Let's see what we can get done here. Um, so let me clear this. I believe I can just delete these two rows without any issue, I hope. So next up, so this isn't, oh, this does balance out now. Nice. But what we have to add in for, see how these equity investments are odd because essentially we have 0 for minimum equity. We need to get the full cash flow. So we have to add in taxes, which we have here. Oh, before we forget, let's format these as well. Just want to make sure balance sheet is good. Good. Keep forgetting to use hold down control and just highlight it all. Okay, so taxes. We reference that. Startup costs we have, exit proceeds. This is just going to be right from the cash flow statement. And we'll add both of them, the depreciable asset sale and sale of business. Capex is that one. And that's fine. Okay. So we drag this all over, and then that should be summing up all these items. Perfect. Okay, and now that we have all these already built into the annual, well, okay, so let's do the annual now. So for this, we want to sum up what's on the monthly, row 9. If the year row matches the annual year. Now we lock this so we can drag the formula down. Oh, shoot. E3. We lock the date or the reference to the year there, and everything else drags. So that's total added per year. Active contracts. This is going to be an index at the end of each year. So that's 10. And then we want to match this date, comma 11. So the last month of each year with our month. And that's the year ending athlete count. I might use this for other, yeah, we are going to use it, so we need to lock this. Okay. Now for total value of contracts. This is a sum if, but we got to update the formatting. Same here. This is bold, thick bottom. Now once the top one's done, we can easily go copy and, oh wait, we got to do the endorsement part first. Hold on. So active athlete endorsements is going to be the same formula as this. And these are the same if the percentages, let me see, what do we do for these percentages? No, so this should be different because these are going for a lot longer, the endorsements. Let's see. Let's see, these endorsements should be Matrix AY 735, 491. Oh, they are. So these go higher. So what's going on here on the annual detail? Oh, haha, I see. The date at the top needs to be referenced to 12 months in the future. There we go. Okay, so yeah, now they start to get more here. Okay, that makes sense. Total value of athlete. So this can just be copy and pasted. Okay, and now we go copy, same deal here and here. And we have total revenue that should match our monthly, 113,429. Yep. And remember, all these numbers are completely automatic and automated if you change anything on these revenue assumptions, expense assumptions, and the validation tab, which we should color this light yellow because there's a lot of inputs on here for this particular model. Okay, so that's good. The rest of these are just sum ifs. So this will be quick. Just get the totals. The reason why I have the model ending a couple months before the end is I just want to make sure the stop logic for the forecast is working. If you were to not run a full 10 years, then it should stop at whatever month you define as the end month of the forecast. Okay, this. Now for debt proceeds, we can do sum ifs, but then this first slot has to just reference this directly. Okay, now we want to check cumulative cash flow, and this is what we're going to use to figure out the minimum equity required, which here it's not much because, well, we'll have to do it on the monthly to figure out actually. So yeah, a little bit, 190, 200,000 looks like the minimum, and that's going to be, assuming tax liabilities, startup costs, and then we've got a little bit of burn for the first couple months. Okay, and then I just want to make sure the check here would be this minus that. Should be 0. Perfect. And this I like to put double 0 so you can see. Okay. For the minimum equity required, now that we know this, we can say, now sports agency, it depends on how you're launching, what your initial costs are, what your overheads are, what your strategy is. but we'll take that here. And what happened? What negative out front? So here, 209,000 is minimum. Again, this business is going to be, it depends on how you scale, how many people you're hiring, if any, to start your outsourcing, but it's not going to be likely in the millions for starting. It's in the value of the business is going to be how well you can network and, you know, uh, attain athlete clients. So now that we have this number, our cap table should be updating. Yep, looks good. Our balance sheet should now make more sense with these two. It does balance. That's great. So this is all good. This all looks great. Let's do the executive summary. So we have athlete type 1 through 3. We reference our annual detail for this. Oh, actually, what happened here? Why is this? Where did I see that error? Oh, that was executive summary. Yeah, that's not going to be right until we finish. Okay, so there's your revenue, variable costs. Now here we actually have 3, but G&A and other can be under sales and marketing. That's okay. Sales, general, administrative is a common expense designation. So we have sales and marketing and general. And then remember, these are also in general. And then this will be R&D. Remember, template's tough because you got to try to plan for every or as many situations as possible. So again, this might be overkill for some, but some it might be perfect. And the idea is you want to always have enough, but not too little of logic to work with. Okay, so this looks good. So I feel like I'm forgetting something. I don't know. Okay, we don't need this. Don't need this. I feel like there's something I'm forgetting. Well, let's look at EBITDA, see if that matches. 86,604. Yep. Okay, so that's good. We don't need these two. Let's put in capex. Debt service. Exit proceeds. Loan proceeds. And taxes. Now, these should all be able to be summed up. Plus that. Okay, that looks good. Cash position. That should match this. Perfect. Go double zeros. Okay, so executive summary is looking good. These numbers will come from the distributions. Now distributions, this logic here took a long time to get right, but it's what I use now. So we want to target 191 for cash flow and just pull up any positive items. And then anything greater than 0 goes in the monthly tab, goes into the top, and then bottom is same deal, but anything less than 0. Okay, and this is another check against the final cash number. Perfect, so that's good. And again, like many agency businesses, it depends on how much volume you do, but it's not going to be it's not likely going to be a ton of upfront costs, and then obviously your ability to earn is going to be based on how many athletes you are managing, and how the value of their contracts. So these two, this 593 and 2655 should match these aggregate totals here. So 5932 and then 2655. Where am I? Here. Okay, so that's good. These are the same. That's a good check. All right, well, so and these look good. Going to column L. Okay, this looks right. Good. Here we can give a little indent. Delete this. Oh, whoa. Why did that get all the way over there? Oh, I hit the wrong button. Okay. Just formatting these so they look nice. Well, so 99% of the usefulness of the model is done. All that we really have left here is, let me put this back to the last month. Let's put the exit value in here. Investment funding from outside investors would go here. Percentage share is this. Owners investments total would be this total here. Okay, perfect. So you can see if we zeroed out debt, this equity goes up a little bit. Um, that's good. Okay, so these sanity checks here, we want to basically give a summary of all the models sanity checks that exist. So this one is that. Balance sheet here. Annual. This is a big one. So when any of these are not zero, there's some kind of issue. Now this one, I actually don't feel like writing out the formula. I'm just going to pull it from this other template. So it's just comparing the cash position of the balance sheet at the end period less the annual cash flow here, and then also less because the balance sheet for the business includes the equity required, so we got to add or subtract that out to balance. So there's that. The executive summary check here, distributions, and then this is just summing up the total cap table check down here to make sure this matches the distributions tab. Okay, so now what we're going to do is adjust some of these assumptions and make sure these all stay at 0. You would imagine how long this took to get right, but it took a bit. So no, let's adjust this to partial year. Up, see, look at that. So something's now see yes or no. If no, there's still an issue. Now I believe what that means is there's a variance between the stop month of cash. Something's going forward that passed the end period that shouldn't be. Yep, this one always gets me. So debt service, we simply need to say if this date is greater than the end period month, this needs to be 0. This is why we do the sanity checks. Okay. Now that should stop on that end period, and then we should not have a variance. The reason why it wasn't an issue if we had included the exit value, because that automatically pays back the debt, so it doesn't matter what month the forecast ended, because there was just debt service was fully repaid on that month, so there was no check issue there. But now if you hit no here, there was, but now we fixed it, so this is back to 0. Let's check the end of the last year. Yes and no, good. And there, good, and perfect. Okay. So those sanity checks are all good. Those are the only ones that ever cause an issue. It's the timing and this yes or no. Otherwise, if these are 0, they're going to stay 0 no matter what you change the numbers to, as long as you're just adjusting to the cells in light yellow. All right, so this thing is ready to go. All we have left, so we don't need the notes anymore. I'll add an index page and then get this thing ready for sale. And then I think Monday I want to do the inventory update to 500 SKUs. We'll see. What's going to be interesting on Monday is if Excel can handle 500 SKUs of logic, because there's a lot of logic tied to it. But again, it's going to be a fun update. It's something that I've got the most, out of every template I've sold, it's got the most. So I like doing big impact things that I know is going to benefit a lot of people. And I know a lot of people want to do more SKUs on that. And if 500 is okay, I might actually go to a full 1,000, and that should help the majority of people who are using that or having any issues with the SKU count. So I'm excited about that. I'll put the index tab in here off stream. It's not really a big deal. It's just describing the tabs. The visualizations, I guess I'm going to stream tomorrow because I don't feel like doing any more today. Um, and yeah, visualizations tomorrow, and this thing will be done, ready to go, and then we'll move on to the next one. Hope everyone has a good rest of their weekend. Um, you can check out more financial models at smarthelping.com. Remember, you can buy everything on the site I've built for $9.99. That includes I've got well over 120 unique financial models, templates, strategy tools for business, all kinds of businesses, and probably over 50 different industries. All great, unique logic. All right, guys, take it easy, and I will be back tomorrow morning, I guess, to do the visualizations. Probably at